Welcome back to Bullbearic. Before we get into this week's forecast, let's quickly review last week's call, because this is exactly why you should be watching this channel. Last week, I told you gold had printed a bullish divergence on the daily chart and that a pullback was coming. That's exactly what happened. Gold closed the week at 4,174, up 2.5%. The bounce played out precisely as forecast. But here's the real question, and this is what separates traders from spectators. Is this bounce the start of a reversal, or just a dead cat bounce inside a bigger downtrend? Let's break it down. Gold first, then Bitcoin, because both charts are telling the exact same story right now. Let's start with the weekly chart. Gold topped out at 5,597 in late January. Since then, we've had a clear descending trend line capping every single rally attempt. Lower highs all the way down. That trend line is still fully intact, and until it breaks, the trend is down. Period. Now, about this bounce. Yes, the divergence played out, but here's what bothers me. That divergence confirmed a full week ago. If this was a genuine reversal, gold should already be trading well above 4,200. Instead, it's still grinding inside the same range. When a bullish signal fires and price barely responds, that's not strength, that's weakness wearing a disguise. And look at why gold bounced. The June jobs report came in at just 57,000, less than half of what was expected. That crushed the odds of a July rate hike down to around 22%, and gold popped to a 3-week high. So this rally is built on weak economic data, not fresh buying demand. ETF flows are still fading. Goldman Sachs just slashed its year-end target from 5,400 down to 4,900, and they removed every single rate cut from their 2026 forecast. The Fed under Warsh remains hawkish. The macro pressure on gold has not changed. So here's the battlefield for this week. 3 levels. Write these down. First, 4,230. This is the immediate rejection zone, and it's the single most important level this week. If gold pushes into 4,230 and gets rejected, that's your confirmation the bounce is over and the downtrend resumes. Second, the 4,400 zone. If gold somehow closes above 4,230 on a weekly basis, there's still a massive wall waiting above. Horizontal resistance at 4,400, sitting right on that descending trend line from the all-time high. The bearish structure only truly breaks above that confluence. Until then, every rally is a selling opportunity. Third, the downside. Below us, the serious support zone sits around 4,000 to 4,050. If that gives way, the next stop is 3,880 to 3,860. And beyond that, my longer-term target remains the 3,650 zone. That's where I believe the real buying opportunity lives. Now the DXY, because the dollar is quietly confirming everything. The dollar index broke out of its long-standing range between 96 and 100. It rallied toward 102, but got rejected before even reaching the previous swing high. That short-term dollar weakness is exactly what's been fueling gold's bounce. But here's the key. DXY is still holding above 100. The old range top has flipped into support. This is a classic breakout and retest, so watch this closely. If DXY holds 100 and turns back up, gold's bounce is finished. If 100 breaks and the dollar falls back into its old range, then gold could stretch all the way to that 4,400 trend line before sellers step back in. Either way, the trend line is the line in the sand. Now Bitcoin, and honestly, the BTC chart might be even cleaner than gold right now. Bitcoin also printed a bullish divergence on the daily, bounced off the 57,800 low, and is now trading around 62,500. But look at the structure. Lower highs all the way down from 85,000. Price is trading below the 200-day moving average, and right above us sits a red box between roughly 63,500 and 66,000. And this box is stacked with confluences. 4 of them, all in one zone. The 200 SMA retest, a Fibonacci pocket, the volume profile point of control, and an order block. When 4 independent tools all point at the same zone, you pay attention. This is a high probability supply zone, and Bitcoin should drop from it. But, and this is critical, do not get trapped by the first touch. A flick toward 66,000 on some positive news catalyst is completely on the table. Crypto loves to squeeze the early shorts, wick through the zone, fill the real supply near the top of the box, and then reverse. So if Bitcoin stretches to 66,000, that is not the plan failing. That is the plan working. The zone is the entry area. The reaction is the trigger. Invalidation is simple. A daily close above 66,000 and the structure shifts. We go neutral. Below that, the targets are a retest of the 57,800 low first, and then the 55,100 to 55,200 zone, where the previous demand sits. And notice the bigger picture. A hawkish Fed and a strong dollar pressure gold and Bitcoin at the same time. Two charts, one macro story. Now buckle up, because this week is loaded. Monday, July 6th, Services PMI. Tuesday the 7th, ADP Employment. Wednesday, July 8th, the big one, FOMC Minutes. If those minutes confirm the hawkish tone, expect the downside to accelerate in both gold and Bitcoin. Thursday the 9th, jobless claims. And it doesn't stop there. The following week brings CPI on the 14th and PPI on the 15th, so volatility is going to stay elevated for the next 2 weeks straight. One more wild card, the Middle East. The conflict is at a delicate point, and nobody knows which way the camel will sit. A major escalation is the one card on the table that's genuinely bullish for gold, and I'll be honest with you, that's the biggest risk to this entire bearish thesis. If headlines explode, all technical levels take a back seat. Let me summarize. Gold, bearish bias intact. Watch for rejection at 4,230. If it breaks, the 4,350 to 4,400 trendline zone is the next sell area. Downside targets, 4,050, 4,000, then 3,880. Thesis pauses only on a Middle East escalation or a DXY breakdown below 100. Bitcoin, bearish from the red box between 63,500 and 66,000. A squeeze to 66K is acceptable, a daily close above it is not. Targets, 57,800, then 55,100. Trade the levels, not your emotions. Wait for the zones, let the market come to you. If this breakdown gave you clarity, hit that like button and subscribe. It genuinely helps the channel. Drop your bias in the comments. Are you Team Bear or Team Bull this week? This is Bull Barrack. Stay sharp. See you after the FOMC Minutes.